technology stocks finally came after the group having been a leader for the whole of 2020 and many years before that as well. They're now down from their peaks, and we have seen a large race in banks and energy stocks in particular. So now the newspapers are full of the thematic theme of a circulation and a switch from growth to value. And they say that often accompany rising interest rates as well. Well, there's some truth to that, but it's also a truth that when you read things in the paper, you're usually not the first to actually read it. I'm Karl-Oskar Ström, author of the book Paleo Trading, How to Trade Like a Hunter-Gatherer, available on Amazon, and manager of the Paleo Fund, a small hedge fund that's just starting up. This is the 9th of March 2021, and now this is the first day where I actually have all the systems fully operational, and we can resume normal trading for the rest of the month and start doing what we are going to do. But along the theme of the book, the main theme that I've talked about in some previous videos is selective participation. So one of my jobs is to look at the market and see if I can identify some themes or situations that I want to participate in. So I was sitting here last evening leafing through a lot of charts, looking at a lot of fundamentals as well, to see if how these large tech companies, Google, Facebook, even Amazon, Microsoft, Apple, is actually being priced, because they've come down a lot lately. And one thing is that in absolute terms they're not cheap. None of them are. They are rather stiffly priced compared to what we usually call the cheap stock. But given their strong cash flow generation in many of these, you look at the PE multiples, but you can also look at the price to cash flow. And since they're investing a lot, that's perhaps important metric to look at. I don't find them too expensive actually, and they're at levels where there have been good buys before. But there was still relentless selling yesterday. So today we are seeing sort of a bounce back in Europe, led by a bounce back in index futures for the Nasdaq. But we'll see if that holds up, or if we need some further rotation here. You know, to see the exact top or the exact bottom is not easy, and it's always in hindsight it's easy to see. But as it unfolds, it's a process. And that's the thing that I want to focus on a little bit right now, and it's also in the chapter about swing trading in the book. So a couple of weeks back, it's been a while since I made a video. I was at the mountain cabin then, and I talked about peak green, and but that being a fairly narrow sector, having had an explosive price move. And then we started to see the supply response, actually, more companies competing with each other, and more companies competing for investor money. So after that, the clean energy index and the ETFs, I'll pull up some charts here, have had a large, substantial correction. And just remember that point. You can look at the other video, but my point is that green is a wave that's going to be with us for the next decade, if not the next century, and that's a good thing. But just like the internet bubble, what we are now seeing is supply side response, which is what these high prices are supposed to do, bringing more players to the table, more companies doing this transformational change. So it's not certain that we'll see the high prices previously seen in some of the names in the sector again, maybe ever, or at least for a long time. And as it goes for these stocks, we're seeing some buying in Europe today, but we didn't see it in the US yesterday. So I don't see any trend signs. I can see that it's come down a lot, and it's in a zone where it's interesting to look for bottoming signals, but we don't see any bottoming signals yet. As it comes to the Nasdaq, and I'll put up a chart on that one as well, we can see that it's come down a while. It's trading as we speak around 12,600 points, the Nasdaq 100. but I think that there might be some weakness still in it, so we need to test the 12,000 level. I'm not sure about that. We might turn around right here, but also, as you can see from a longer term chart, we're really not oversold yet. We're not really at easily visible technical resistance. So to guess that it will turn here is just a guess. Actually, we don't see it yet. And if you let go about buying at the absolute bottom, and want to see the signs of a change, you can more easily buy it after the sign has come that it's turned. As for some of these so-called value stocks, we've seen financials go a lot higher, and they're at least in the first part of a rising, a slightly rising, interesting interest rate environment. They're doing well, but they've had a very strong run now, so I hesitate to go in and buy them heavily at these levels. As it comes for energy, it was a surprise meeting by OPEC last week that gave the oil price its final push, at least so far, because it was expected for them to increase their production, and they have curtailed production, so they could increase it by several million barrels a day. But they didn't. It's a rare feat actually, because it's hard to hold a cartel like that together. But they like higher prices. But when we look at the chart here, what I can see first, the chart of the Brent price. This is a weekly chart showing the last 5 years. We can see now that it's extremely overbought, and it's at technical resistance. So again, I don't see any signs of it turning yet, but it's in the zone. It's in the zone where it's. I won't consider it a good buy anymore. It's not a definite short yet, but it's in the zone that you need to look at. And we can say the same thing for the index of large oil companies. The ETF is XLE, traded in the US. I'll have a chart of it up here. That have had a very strong run. Clearly a rotation out of tech, but as I said, tech is growing. These oil companies, is not growing. So it's more a short-term function, I think, of increased demand, and clearly, of course, of higher oil prices. As we see in some of the other commodities, some of the metals, some of the metal companies, we see perhaps the beginning of a topping process. I'm not that sure, but the charts will tell us eventually. So sign up for videos like this if you're interested in that. I have to go back to my screens now, but I like to make these short videos every once in a while, just to clear my own mind, try to see the longer view, and of course the disclaimer here is that this must not be interpreted as investment advice, and I write that in the book as well. The book is for self-directed traders that can make their own decisions. If they need to talk to a broker and need advice, talk to a broker, you'll get advice. You won't get it here. What I like to do is to talk about this in a thematic way, so and to talk about some of the things that I like to look at. Right now I'm at the sidelines, or at least I've started to put my toes in the water for seeing how to play the bounce in tech play. And it's also semiconductors have been hit hard. They come down a lot, so I'm looking into some of those names and in the index there. But also the simplest and most perhaps best way to play it in many ways is to trade the Nasdaq as a whole. So that's something to look into if you're interested in this kind of swing trading. I'll be looking at it, but as I said, the signals are not clear yet. We might have further downside in it before it turns. I've seen it before that prices can turn kind of mid-air in a chart, and it wouldn't surprise me that much. But when I look at the chart, it tells me 12,000. Now I'd like to see it touch that and see how it behaves. But the markets are always doing one thing, and that's to surprise us. So until next time, have a nice day.